There's a couple of themes we're going to try and cover in a half hour. One, the macro environment. Clearly a topic everybody's talking about. Volumes, what things are looking like, what the forecast for the rest of the year looks like. Investor confidence. And the way that those fit together, as a lot of people know, is we're in an environment where the market's up more than 10% and volumes are setting 6-year lows, which is usually a very rare occurrence. And what does that mean, and what do people think that means for the longer term prospects? And finally, we'll try and touch on what some of the recent outages in the industry that have been very talked about have maybe done to investor confidence in some of those topics. As I said, volumes are hitting 5-year lows. What do you think is driving a lot of this decreased activity?
I think there's a whole sense of still fear in the marketplace, and that people who don't necessarily understand current market structure, and so therefore they see the market up 200, down 100, up 200, down 100, and so they don't understand it. It's not nearly as easy to understand as it was years ago. The market's fragmented. People don't, they are in a position where they're almost afraid. And until they get that confidence back, whether it's their personal confidence in their business, whether it's their confidence in the economy, whether it's their confidence politically, listen, don't also forget, there are a range of new products that have been created over the last decade. ETFs for one. They're easy to invest in. They trade like stocks. You can get access immediately to either a country, a group, an industry. And so therefore, ETFs have taken a lot of the volume away from individual names because it's easy to trade them.
Clarke, maybe from a DC perspective, obviously a huge amount of focus on the election and the conventions over the last couple of weeks. Any thoughts around some of these topics, the market performance, how much does the election play on these types of issues, and any thoughts around the election cycle?
Yeah, I'd say a couple things. First is I think your average member of Congress, and frankly your average policymaker in Washington, is a lot like retail investors in terms of their understanding. Again, they too, I think, are impacted mostly by the macro elements that Mike described. I think too, they, like most retail investors, and frankly like many of us, sometimes don't even know what to make of the markets. Add to that the fact that then in an electoral season, the fact is no one's really paying attention to the market, I think, unless you have some major event.
I want to touch on the point Mike raised around the industry outages over the last few months, years, et cetera. Obviously, we had the flash crash back in 2010. We had the BATS IPO. We had the Facebook situation. We had the Night Capital event a few weeks ago. Clearly not helping a lot of the things that we're talking about.
I think these events have been very unfortunate. I spent one of my prime summer weekends writing a letter to the SEC about the Facebook incident. There's clearly a strong move towards automation, and it's significantly fewer people. It is significantly more automation, and our structure reflects that. In the modern day world, you look at what you guys have done as an exchange, and you're a tremendous technology platform. You have multiple for-profit enterprises. Is it still appropriate for the exchanges to be the bastion of market integrity that they once were? Or should we really, should that be evolving? And I think that really manifests itself in the Facebook IPO, and we're talking through a lot of those issues now. And who's got the appropriate oversight? Who's in the position to look over the market and try to prevent, and maybe in some cases kill, aberrant trading behavior?
It seems like it continues to get more and more partisan, even by Washington standards. But any thoughts around what's driving that, or whether it gets better or worse through the election cycle?
Yeah, I have never seen the level of partisanship so bad as it is now. That wouldn't matter in and of itself. Sometimes it's actually kind of entertaining, right? It does matter, however, if it means that our government is incompetent or unable really to address the issues that really matter to us.
The good news is that you get any sign of actual leadership, and the markets seem to respond. People seem to feel better, and I do think that I'm generally more optimistic about volumes returning to the market. I think from a resource and time perspective, this is clearly we're bearing the brunt of it this year, and the layers and layers of additional regulation under the guise of transparency, which I think is obviously very important for markets. Any market that's more transparent is better.
Kenny, from your standpoint, obviously you deal with a lot of institutions. You know, what do you see them reacting to in terms of some of these microstructure failures?
I see them reacting to the fact that when you're looking for, as an executing broker, and you're looking to represent a customer, you're looking for liquidity, it's almost impossible in 70 places. And so how do you properly represent the customer? And customers themselves, they can access it, but they've run into the same frustration, is that I can't find any liquidity. And I think that's a lot of the frustration that I'm hearing from customers. And I hear it from myself. I hear it from my peers on the floor, you know, as brokers representing customer interest, institutional customer interest, that it's very, very frustrating.
And I would say the good news is that the kinds of conversations that we're talking about here are being had right now. Finally, people are starting to say, what is the right sort of amount of lit versus unlit trading? What is the right number of venues? But on the other hand, I do think, Joe, to your point about what's the DC perspective, you know, it's easy, and a lot of people, you know, bash the SEC. I do think they should be given credit for addressing some of the issues around, for instance, May 6th, with some of the regulatory changes that they've made. It's obviously, as we all know in this room, extremely unlikely an event like that would happen again. That's a good thing, and I think people who follow these issues in DC give the SEC and the industry credit for that.
Thanks again for attending today.